Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, August 26th. Hope you guys had a wonderful weekend, and we got a volatile week this week, and we got one economic news release just for today, and that is the durable goods orders for the month of July. So back in June, we had a 3.9% increase in the durable goods orders. The forecast for July was actually supposed to be a negative at 4.9, and it exceeded that to negative 7.3. So obviously not good numbers right there. So let's check out the stock market, and stock market's up. Well, we got negative news, so why is that? Well, that negative news is now, and with the new home sales, is now making the investors feel like, well, the Fed's probably not going to have a tapering at the September meeting when they meet in basically about a week, yeah, about next week. They're on the 6th, I think it was, or 8th, around there. But they are now kind of figuring, okay, September's meeting, we got some news that came in not so good, so therefore that's good news for the stock market, and we'll go ahead and take a look, see how that's faring for the bond market. And actually showed an improvement. So with that in mind, now we're up to 99.59, where we left off last week or Friday at 99.34. So we making a little bit of ground here, not quite where we need to be at, as over that week or so we were all the way up to 101, and then took that nosedive for the worst. And at one point we were even at 106, just above 106 level. So we're still quite a ways even from the better what we had earlier this year and back around May. So, but with that in mind, we do have a nice improvement here, and the negative part is we do have opening gap. So the question will remain is, are we going to close that gap? Are we going to be able to go stronger? We're testing the ceiling right now, as you see the double lines right there on the graph. And so we're going to have to kind of wait and see. Again, we do got some volatility that came in. The opening gaps we had for the worsening that we had about 2 weeks ago now are going to be stronger for us to be able to resist now, because we didn't close those too soon within a couple of days. So now they become more difficult as we kept going down. So they're going to be a ceiling, and they'll be more difficult to go in. So we could see some sideways patterns here. We could close this gap, and then hopefully maybe we can work our way upwards. But the market's gonna kind of dictate, and we got kind of a long weekend coming up ahead as well. So Friday will probably they're going to be looking flight to safety, so we may have some luck there depending on what kind of economic news comes out or other global news that could hit us as well this week. So be prepared for a volatile week this week. All right, so the good news is that we had the stock market's up, and as well as the bond market is doing better, so that means an improvement in the interest rates, even though we got negative reportings today. All right, see you guys tomorrow. Thanks for watching, and again, see you tomorrow.